First trading day of the year today. I think it started a bit special. There were some assets moving in certain directions that I didn't expect. For example, the VIX and the dollar was up and gold. You don't typically see all three of those moving up, but it can happen. It's, a fear trade, let's say. But you also had the DAX and the DAX up, so the German markets. And then eventually the US markets, they just opened and just started to just drift lower throughout the day. So anyway, we're going to take a look at what happened to the markets today. It was pretty interesting. It was obviously the first trading day of the year, and I think that's why some positions were a little out of whack. So I didn't trust, especially pre-market movements that much, but we seemed to pick up a bit of a direction pretty early on once trading opened. So let's start with the default setup where I just look at the US markets. I'll ignore the DAX for now. Obviously, it closed green, but it closes before the US markets close, obviously. So here we're looking at the SPY. You can see we opened up, small gap up here, and even ventured higher. And then we just sort of drifted lower and flushed. And, we did recover some losses. So, yeah, it was a red day, but it did not close near its lows. Let's just go to the daily chart now. You can see it sort of, opened here, closed there, went higher, went lower, but still a bearish day, if you have to call it that. The Nasdaq also, you expect a bit of a bounce. There was some sideways movement. A lot of people were talking about this Santa rally, and I think it fizzled out quite quickly. I don't think there was a Santa rally. It was just sideways. So I think that's pretty bearish. I mean, you consider you had several sideways days, and then here's your one where you finally venture higher than the last couple of trading days and you just close red. So for me, a pretty bearish day. Not very, very bearish, but certainly not bullish. All of the indices red, the Nasdaq leading the way, the Russell right behind. That's typical also what we've seen lately, and also the Dow Jones basically unchanged, very bullish compared to the other markets. So I just feel like the Dow Jones is really defensive, dividend, energy sort of market compared to the more growth, speculative, technical, digital side of the Nasdaq, the S&P, and the Russell is a lot of small businesses who have risky loans and with higher interest rates. I can understand why that was also a bit lower. So yeah, I can understand the Dow being the leader slowly during this bear market, but I still think it's a little too elevated. What do I think is going to happen? I think the market will continue lower. I don't know if we're going to have a bit more of any follow through. I wouldn't call it follow through, but any more upside pressure during this week. But I don't think there'll be much, and I think we're just going to drift lower. So S&P, I'm looking at this third last support zone. Nasdaq, especially with some of the stocks like Apple, like Tesla. Tesla today was wild. Still very, very weak. So Nasdaq has already touched its second last support. I think we're gonna go to the last support, and if we go there, we go lower. We're not gonna go there and bounce. I mean, you might have a small bounce, but it's just gonna be such an ugly chart. I mean, think about coming from all the way up here, all the way down there, sideways and then lower. That's just this very, very weak chart. So for me, that will drag the whole market lower. S&P all the way down to new lows. Russell will follow the Nasdaq straight down to new lows. Okay, so markets, I would call it a sideways to bearish pattern, what we saw today and what we see the last couple of days. So yeah, I see markets going lower still. The VIX was okay today, 5-6% and some 0.8%. I think we're going to get to 26%. Sorry, 26 on the VIX, with at least test 26 when the Nasdaq starts to flush towards its all-time low, So yeah, I can see VIX finally come back up, but I've been mentioning how it's pretty broken. So let's not look into this too much. Let's look at interest rates. So interest rates, and they've reset already because I'm recording past midnight here in Europe. So it was a red day. And you know what? Let's look at Europe first, because Europe had a trading day yesterday, unlike the US. So they were able to move a bit more. And it was quite a red day across the board in European interest rates and actually worldwide interest rates. And I think we saw a bit of that follow into US markets. So although it looks a little green and a little unchanged right now, interest rates were red today, for Tuesday. And I think that's a bit to do with the European rates also sort of dropping off because they basically made new highs. You know, if you look at the EU 10-year and the German 10-year, which is basically the EU 10-year, we just made new highs on the last trading day of 2022. So I think the last 2 days was just sort of consolidation. I'm just going to bull flag at the highs and then go higher. So I think US rates are a little behind Europe. So they also sort of went a bit sideways red today, but I think they'll also go back up and test their this descending resistance. I think, okay, all of them except the 1 year. The 1 year is basically testing its horizontal high, but the 2 year, we've already broken out the descending resistance. 5 year, we're going to touch it soon. 10 year, we basically touched it. We're going to break out of it. And 30 years, same thing, just sort of touch it, break out of it. So yields higher still, even though it was a bit of a red day. I don't see anything wrong with the bullish pattern in yields going up. And let's look at the dollar. Dollar is very interesting. I was wondering whether it would hold its move because I made a 3-minute video in pre-market just looking at some of these anomalies. But here you can see that the DXY did hold, closed above the descending line. I was looking for that descending breakout. We've got it. So I think DXY will move back up to 107, and a bit, even 107.5. So I'll leave this target here. Let's just do that. And this target sort of was perfect. And if we did flush, which looked very likely in the last trading day of 2022, I think ascending support was pretty soon below. So I'll leave these targets where they are. And obviously, with the dollar going up, you got the euro going down. The US dollar Japanese yen just under its prior support, just creating a hammer. So that's like a fake flush. We'll see if we can take out its descending support, descending resistance there. The pound was red, obviously, against the dollar. So yeah, dollar was strong mainly because of these three, and yeah, it broke out of its descending. So for me, dollar goes up, VIX goes up, markets go down, rates go up. I'm generalizing, of course, but that's what I see. And what about gold and silver? So they had obviously a spectacular day. They hit gold hit 1850, which I think was ideal. You could see the resistance here. I just drew this top end where it hit several times and it actually coincided perfectly. I did the same with the bottom. It wasn't relevant today, but if we go to silver, although silver had a nice move up, when the market started to come down, gold and silver started to follow the markets. And here we can see the ascending support is very interesting with silver. Silver seems pretty weak. If I can say that, at least relative to gold, I mean, they're very strong, I mean, they've done amazing. This is like climbing a wall of worry. Everyone thinks that, okay, the top is in, the top is in, they've done too much and they keep just climbing up. So, but I must admit, this is sending support here for silver. It's, first of all, this candle, this daily candle, I understand why it happened. Gold and silver looked strong, the markets came down, so they came down, but still, it's pretty weak price action. And if we look at selling support, we're going to break. So I'm going to leave this little graffiti in. I still think it might happen. I think silver at 23.5, we go next, we break the support. And then after 23.5, once we lose that, then basically follow this pattern, We'll see where we find support on the way down. It's been very, very strong all this time. So I'm going to be buying early. I've mentioned this already. So let's see if we even get to this ascending support, even with markets flushing. Gold and silver have really surprised me. Very impressed, which is good because I'm long-term bull. I own the positions, obviously the precious metal stocks. So very important that it's strong. But, I like to swing my long positions. So try and maximize profit, minimize losses. So trading around my long-term position. But yeah, gold was pretty strong, closed green at least, and just stronger than silver. But then again, if silver starts to crumble, gold, I don't know which one will lead the way. They take it in turns. But what is interesting is although gold and silver were a little green, and remember the markets were red, the miners were very green. So the miners really outperformed the underlying metal, the markets. They're in a world of their own today. And that's quite surprising because late, if you look at the last couple of trading days, they underperformed the metal and they followed the market. So what I tend to notice is that the GDX and GDXJ, they're very strong. When the metals are up, they're up. The markets recently, it's like they don't care at the beginning of the day, of the trading day, they don't care, or they even trade inversely. If you look at the open, we just screamed higher and sort of went sideways up the whole day. If I look at something like the SPY, we screamed high, but then went quickly lower, and the GDX and GXJ kept going high. It's like they sort of were inverts to the. See what I mean? I just get this feeling that they shrug off a bit of the market weakness, and sometimes they move higher when the market moves lower. I've noticed that a little bit. So they're completely outperforming the metals. However, once the markets really start to crumble, they follow. So I'm going to still stick with my thesis that we get the miners lower if the general markets crumble. I just been betting quite a lot on this drop in the miners. It hasn't happened and it looks very bullish. Some of these just hitting their head here at 30 on the GDX. Obviously, we made that high at 30.5. GDXJ, same thing. Look, this is like a quadruple breakout. Hitting 1, 2, 3, 4, 5. If tomorrow we keep going high, it'll be 6 times. It doesn't matter though. It doesn't, for me, I know what I'm going to do regardless of the scenario. If we break out, I've sold this zone twice. So I'm not selling. I haven't sold in a while, miners, because I've sold already. Next time I'm selling is when in GDXJ, the juniors, for example, once we test 40, I'll be selling at 39.89 or something, for sure. But that's quite a move away from where we are now, the close. That's almost 10% away. GDX, similar sort of thing. I'll be trimming on the way up at 31 and 33. I don't even think 32 counts. So 31 and 33. And where's 33, for example, that's also 10% away. So I'm not really going to be trimming for some time because I've already trimmed this zone and I consider my position across all my miners as quite light. I'm not going to go through the whole portfolio. What I will indicate, there were some strong ones. The seniors, for example, gold, Newmont, look at them, Nico Eco, all at the top of the resistance, really running in parallel with GDX and GDXJ, which makes sense because they make up a lot of it. But particularly happy with Newmont, which is my heaviest holding, and it was my worst trade. Now I was in the red for some time. I didn't shy away from that point. So I made that quite a few times during this period. Although I did trade a little bit, I'd buy a little bit, sell a little bit, and as I typically do. But now I'm in the green, so very happy about that. And I'm looking, and I did trim a little bit, 49.19 today. I just hold way too much Newmont, so it's the only exception. Everything else I didn't sell, but I did trim a tiny bit. But I'm looking to offload a little bit once we start hitting this zone 52, 49, 53 and higher, because I really need to at least half my position. But anyway, not to get into any specific stock. So anyway, the point is the miners are outperforming the metals and outperforming the market for sure, even more. So very interesting to see this dynamics. Is it just because it's the first trading day of the year and things are a bit special? Maybe. But anyway, I didn't do any trades. I'm waiting for another real level breakout in the GDX and GDXJ, which I actually don't think we'll see if the dollar keeps going up and if the markets keep going down, regardless of what the metals do. But it's interesting. I mean, I know what I'm doing. If it goes up, I'm selling all the way up here. If we even get there, if we go down, good. I need to buy more. But I don't think I'll be buying at the bottom of this ascending. I'm looking for a big move lower in the GDX and GDXJ. Finally, I did actually buy for the first time ever, or at least the first time in a long time, Tesla and Amazon. I added them to my portfolio. I didn't think I'd ever buy Tesla. I did used to short Tesla a long time ago. I made money even though it was actually going up crazy. I got a bit lucky there. But Tesla I added at 107.19 or something like this. Just basically near low of day, just coming out of low of day. So I just thought it was totally oversold, but also I do think it will go lower. I'm just trying to build a small position. So I buy a third now. I buy a third if we get to 100. And if we flush 100 and get to 92, I'll be buying half. Um, so let's say I want to put 4K in. I'll buy 1,000 today, 1,000 at 100, and 2,000 at 92. So that's 4K in, average about 100, let's say. And then if we go lower, I'll look to maybe double my position, make it an 8K position, hopefully around 60 or something. I think getting Tesla around, and by then the average will be sort of 80, so 8K at 80 Tesla. I don't think that's bad. I don't think I'd want to add much more, but that's the way I would do it. Machine gun my way in, and the total of all three entries equaling 4K, that would be half of the full position I want, and the rest I'll buy when I think the real low is in. That would be with the market flush being over, and that's all I would allocate to Tesla. But anyway, today was really just that first third. I didn't even buy, obviously, because we didn't get there. I didn't buy anything for 100 or 92 because we didn't get there. So it was the first nibble. I don't think it's the worst entrance. 107 Tesla. Um, Amazon, that was another one I bought. I do think that it's pretty, I'm not going to say it's cheap, but we're basically down 50% more actually. How much are we down on Amazon from this double top? And I bought it at 80. Geez, I forgot. I think I bought it 85-ish, but maybe a bit higher. More than 50% down. Yes, we can go down to 60s, but I just feel like if the market rallies, this Amazon will rally quite a lot. This is the kind of stock you can get a kind of guaranteed, I don't know, 20. I mean, look at that. You could easily get this to bounce 50%, basically. Amazon is almost a 50% guarantee, but that's from when the market bottoms. I don't think it's bottomed yet, but the thing is, Amazon's not going to go bankrupt, It's not like these frauds that have a lot of debt. Amazon is just a world leader, top 5 of the world. So I'm going to start accumulating very slowly some of these very big boys, and I have no fear doing that. So anyway, that's all I'm going to cover. I'm not going to cover the rest of the portfolio. Other stocks maybe worth a mention. Apple, that was down more than 4% at some point. That one, again, is one of the very big boys like Amazon. And that one just made new lows. So, no wonder the Nasdaq's finding a hard time trying to close green when you've got something like Apple dragging it down. Okay, Amazon is finding support because it's very strong support, which is also why I bought it. But it's just some leaders are still weak, and my thesis hasn't changed. I think rates will stay higher than people think for longer than people think, and I think it will cause new lows across the board. So I just finished with Bitcoin. Nothing to say about Bitcoin. Not even acting as a fear trade, not an inflation trade. It's lost its sort of definition in the markets, I'd say. It's also lost a bit of volatility. But I do think when markets start to resume their downtrend, like the Nasdaq, this will very quickly get to 15,500. And once we start flushing, the volume will be back to the downside. So I think that's it. Any worthy mentions? Oil is looking like it could go back down to its lows, which is quite surprising because I thought oil would be a bit stronger. Natural gas has made new lows, completely flushed its ascending support. So some of these commodities are looking weaker technically. But, then again, gold and silver really outshining. So very impressed with gold and silver lately. And we'll keep an eye on it. Okay, that'll do. Good luck. See you tomorrow.